Despite seeing historic levels of institutional buying, there's still somehow more sellers. So the price goes down. I don't like it. Bitcoin, crypto, morning tea. Hey. Good morning, everybody. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. All the humble opinion of this piano Zamboni. Bring it. The data. The FOMO index has inched down to 29 from yesterday's 30. Bitcoin dominance is 55.7%. 24-hour volume is 71 billion. The overall market cap, 2.07 trillion. Give or take 100 million. Well, this bull run, she just can't seem to catch a break. Having a doldrumminous summer is one thing, but the incredible selling pressure is enough to drive a long-time hodler batty. But we talked about this, so it should have come as no surprise to anyone in this boutique community when Bitcoin price action, well, she had a little dump. Now, what I don't want to see is continued bearish pressure that takes us back down to retest this bull flag breakout level, which we'll now refer to as a channel of descension in the loving arms of the 20 moving average and potentially the 50 moving average at 59.5. So don't be surprised if we see an initial pump followed by a substantial dump. Lord love a duck. She didn't do just that. After the CPI Don't Care came out yesterday, price began to rally up to our old channel of eternal monotony's resistance level, picking out at 61.8, and then the substantial dump took the stage and price action plummeted down, finding a bottom and a bounce at 57.7 and has pouted its way back up to a time of production, 58.4. Now the good news is we got that much needed bounce from 57.7. That's the level we talked about on Monday that we most definitely need to keep above. It's our second time getting that bounce, so I don't want to see another, because she'll probably crack under the 3 times a charm market myth. Is that a dad alert? Yes, it is. A reminder to keep our papers on the 20 moving average, which is about to cross bearish over the 50. But pianomattyb, isn't that also the 50 moving average crossing bullish? I mean, is your market cup half full or empty? Yes, you're right. One might look at it that way. And my market cup is filled with black coffee and cares not for bulls nor bears, but thanks for asking. The reason I don't like this is because the past 3 times this happened, we saw considerable downward pressure, aka July 31st. The 20 crossed bearish over the 50, and we saw price action take on 25% loss, which rocked the market. Before that, on June 10th, the 20 crossed bearish over the 50 and boom to spank. We saw a 25% drawdown, and before that, on April 13, the 20 crossed bearish over the 50 and we saw 17% drawdown. I can go on and on and on. But I was hoping historical Norm would have chimed in by now, but I guess he's busy. So 3 of these bearish crosses had an average drawdown of 22%. So where would a 22% drawdown take us from here? Well, that would be EGAD's 43K-ish. Isn't that the 61.8% fib? Over on that monthly chart, I've been droning on and on about ad nauseum for the past few months. Yes, it is, and hitting that level would change everything. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth. A day none of us are guaranteed. We're not guaranteed these days, yet we're lucky enough to have anyway. So get out there, knock 'em dead, and remember, we're playing the same game as our psychopathic elected leads. And that's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a cup of black coffee. Join me for a quick one, and by all means, sing it with me now. Or on the banks of boom to spang, Bitcoin, crypto, morning tea. Hey, whoa, cha-cha-cha-ching.
Didn't want to switch over to the main screen. So perhaps maybe there was a little bit of an edit on that one that I didn't clip. You know, there's a million things you got to do before you upload a video and set up the stream and all the BS that comes along with it. It's simple. If you really think about it, it's just an equilibrium of buyers and sellers. So a lot of times we get frustrated with the fact that price action seems to go down no matter what. Even though there's, you know, if you watch Bitcoin YouTube, you'll just see people saying all about who's buying. Oh, this person's buying 250 million and this institution just came out with this, blah, 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 right? As price goes down, as we're in 58.8. And it gets frustrating because you're like, well, what the hell's going on here? Like, what is there any rhyme or reason? The fact of the matter is, if we take out any conspiracy about the market being rigged or controlled, or, you know, futures having an impact. Oh, well, who would have thought futures would have an impact on Bitcoin? I don't know. To suppress the price. Not saying that it is or has or will, but it's done in the past. And so, you know, history has a funny way of repeating. But at the end of the day, if you want to take all that stuff off, what do you got? You got equilibrium of buyers and sellers. And it's basically, you know, on one of my apps, I don't know what it is, one of my 16 chart apps I have on my phone, it just has, you know, like this ongoing red green line of buyers and sellers. And essentially that's all there is. My ears are popping out here with this. I'm sitting on the cord. That's all there is. When you have more sellers than buyers, guess what? The price goes down, and now, you know, pianomattyb. Well, what about the consolidation after hours of this TARDFI market that doesn't really real-time blockchain? Yeah, you're right. So there is the market does have a certain tardiness into when it reconciles its buy-sell. So that is a factor. Sneaky Pete vaporizes y'all into bullion too. That's bull Bitcoin, Sneaky Pete. And as a Canadian, you're in luck. It's probably, you see, I've said this before. I've been contacted to, you know, have exchange affiliates and whatnot, and I've always, my moral hazard is sending lambs to the slaughterhouse. I don't want to be responsible for anybody losing their Bitcoin. And I feel unless you're a pro, and I'm not a pro. You guys see how accurate my TA is? I'm not a pro. There's pros, right? You're eventually going to lose it. And now if you're on an exchange and you're trading altcoins, I mean, it's a casino, and I wish you the best luck, and I hope you make millions of dollars. And if you lose it, well, there's no funerals for people that get shorted out on altcoins. Knowing the nature abhors the alt kind short or loss. No one really talks about it. But Retro Mike Deck, I'm a pro at losing. Well, that's the thing. You have to be a pro at losing before you can be a pro at winning, and that's why it's very expensive career to get into. It's like they always talk about how much it costs to be a doctor in the States. It's about $800,000. Like, yeah, well, I guess over the career of a trader, $800,000 probably cheap. I mean, usually if you're a pro, you'll come out on top, obviously, but there's 1%, 5%. Anyway, Bull Bitcoin is a Canadian exchange which only does Bitcoin, and the cool thing is that if I had known about Bull Bitcoin, a long time ago when I first started trying to get on exchanges, like a 2019 Gemini, you still had to be like, you needed a degree in IT and in computer science to get on. And the fees were and are still crazy. Had I initially done it with Bull Bitcoin, I would have saved thousands of dollars in fees. Thousands of dollars. Every time I get on the exchange, it's like a 50. I move it again, it's a 50. I move it again, it's a 50. I just wanted to get Bitcoin into my ledger, and that, it's like $100 minimum just to get it there. And now with Bull Bitcoin, it's easy. You just every time you buy it, just sends it to your ledger. So I think it's amazing. So, and it's only Canadian, unfortunately, for the Americans, but Sneaky Pete, BC Elf. You guys are Canadians. It's unbelievable. Check it out. And I've always had a moral hazard of sending people to exchanges, because it literally is sending a lamb to the slaughterhouse. Because you get, I remember when I first got on trading currency, I was so excited because I thought, I got this. I got it. I had been paper trading for, I don't know, 6 months, 9 months, but when you paper trade, you exaggerate, when I say 9 months, it was probably 4 months. You're just saying, I'm ready, right? And anyway, I got on there and I immediately just started losing. I was like, oh my God, all these trades are going sideways on me. Why am I losing every trade? Well, fact is I didn't know enough, and I wasn't good enough, and I wasn't a pro. Because what a pro is all these announcements that come out that rock the market. So for instance, I think there was some employment data that came out positive. Didn't really do anything because we're in a sideways market. So you remember on Monday or Tuesday, I was talking about the moving averages reckoning. That in itself is a perfect metaphor for a sideways market. I mean, show me a sideways market without showing me a sideways market, and those moving averages all coiled up is the epitome of a sideways market. Now, it was funny because today I wasn't going to make a video because when the market doesn't move, it's very hard for me to make a technical analysis video, a reaction to movements, right? But as I started looking at the charts, I did notice this cross. And now, is it the 50 crossing bullish or the 20 crossing bearish? I don't care. The death cross, the golden cross. Usually in my books, like zoomed out, any type of cross is usually indicative of the end of that lag. So when the death cross, we've usually hit the bottom, and the golden cross, well, maybe we topped out. But anyway, this one did have a lot of this historical value, and yeah. By the time I had written the script, I was like, gosh, should I bring historical norm into this? No, but it would take an hour, and it would kind of blow out the gauntlet that I run here. Trying to get the video out by 8 o'clock. So you can see right here, I get this marker. This is July 31st. This is when Backup Kid, member for 4 months. Hit the like button while you listen to this song. I think that's Carl Elder's lyrics. Burp, burp, burp. Call the lawyer. Someone's using Carl Elder's lyrics. Anyway, thank you very much, Backup Kid. July 31st, we had the bearish cross, if it were. And we had this 25% dump. That's substantial. I mean, there was, there's that saying, show me the fundamentals and I'll show you the technical analysis, or show me the technical analysis and I'll show you the fundamentals, right? And those things do have, like, this epic dump was part of that Japan carry trade falling short. And if we go back to what was it? June something. Oh, it's getting messy. Look at these charts. Look at that. Imagine my trading course. Yeah. So, you just got to learn how to understand these charts. It's simple. It's simple. Can't you tell? Anyway, here we go. This is, what is it? June 10th round. So we'll do another marker here. Get it more messy. June 10th, we saw that bearish cross. Oh, no, where is that? That was wrong. I moved it. June 10th, we saw this bearish cross here, and what happened? Well, we had this 25% dump. That was pretty epic. That was like the first shock to the market. Man, let's get rid of all these things here. Jesus. Oh, I can see clearly now. The lines are gone. Look at that. Unbelievable. It's a noisy little so-and-so. For how many years have I said that the 4-hour chart, she's a noisy little so-and-so. So that's 2 months. So let's go back again over to here. April 13th. Let's draw a little Hicks in there. Oh, and the things come back. It's too noisy. And this was a 17% drawdown. So essentially, what I take from this is the 20 moving average under the 50 moving average. Oh, Jesus. Let's get right here with the line gods. Oh, my God. She's so noisy. Little so-and-so. There we go. The 20 moving average underneath the 50 is not a good place to be. And if we go there, prepare for some more downward action, I suppose. It doesn't have to, but the last 3 times this did happen, we saw downward pressure and 25% or 22% downward action from here would take us, isn't that bizarre, right to that 61.8% fib, the goldenest of golden ratios, which I've been ad nauseum. And, if we go down this road this month, let's move this over, this monthly road, we look at this candle, basically right around the 38.2%, my favorite fib. We didn't get the bounce we needed. We came down. Over here, the last one was right at the 50% fib. These are monthly big charts. These are the big boys. These are the Hercules planes of the charts. And we got a healthy bounce. We did get a healthy bounce off these fibs, but if we see another 22% downward pressure like we have the past 3 times we saw this cross, well, that would take us to the 61.8. And why I say this changes everything, because in my big scheme of things, you got to wait for the big boys, in this case, the monthly chart, to change its trajectory. And I feel when it hits the 61.8% fib on any chart, we generally see the trajectory go the other way. So that's what I'm not hoping for it, because this is why this gets dicey at 61.8% fib on the monthly chart, the Hercules of the charts, is that we may see institutional capitulation. So some of the people that bought in, around these prices, they'll be underwater, and these boomers, they don't like to be underwater, right? So they might be ringing up their guy. Hey, remember that Bitcoin you told me to get in here? There's the future of finance. Yeah, get me out. And there's only so much they can do. So we may see a certain degree of capitulation underneath this 50K if we get there. I'm not saying we will. I'm just saying we have seen an average of 22% drawdowns once we cross over the 50 on the 4-hour chart. Now this is a noisy little so-and-so. So let me remind you, let's go back to the weekly of how this is so noisy too. This is just really a sideways channel. Now we are at the bottom of our channel. And if there is a silver lining, the last time we tested the bottom, we closed a candle underneath, which was hella bearish. That was down. We closed at 55K. A great buying opportunity there. And the last, who's texting me? The last time we closed the candle last week, we fought back. Geez, imagine that was at 40. That was 49. That wick. That which once wicked will get candlesticked. Could be the most accurate TAI ever done, gone, and did. Oh, I don't have the sustain pedal on because my feet are crossed underneath for comfort. I could have uncrossed them and hit the sustain and made that way better, lush. See, I did it. I got the best of me there. So really, we are just in the sideways channel. We're at the bottom of the channel. And if all my squiggles don't do anything or do anything, we're, following this squiggle. Jeez, nothing worse than that in-ears going out all the time. We're following it. So what does that take us? Breaking out of this downward channel of descension. 61K. Doesn't that seem weird? Really breaking out of 61K? Well, we tried. Look at these wicks. These wicks are up here, 62. This one's 60, a little over 62. This one's barely 62. So 61 in 3 weeks from now. Oh my God. Can you imagine 3 weeks of this? Well, we've had about 5 months of it. So 3 weeks more. It's no big deal. And generally, the truth of the matter is we're almost at that point. It's emotional exhaustion. It's the exhaustion of your own patience. Most people are just going nuts, right? They can't take it. It's not doing anything enough. They expect it to be 100,000 errors by now. So they're starting to reconsider their position. Not us, obviously. We're long timers. We're hodlers. This is nothing. This is whatever. It's another walk in the park. So Amy Lives Crypto, I got sent a link to Amy Lives Crypto YouTube channel. I'm sure most people know, but she's also on YouTube. So check her out if you haven't. Subscribe to her channel. It's good production, good info. You got to reward people that do that, or else, they might disappear and you won't see it. You'll miss the chance. So make sure you go check out Amy Lives Crypto. And so here's where we are. We're just at the end of the longest channel, maybe. This is a real test. It's a real test of your financial sobriety. Can you last? Can you last before the market turns around? Most can't. That's the truth. Most can't. But I believe I was talking to Pablo from Bull Bitcoin, and I was saying that the community here, even though I have maybe the simplest of TA, I don't know how simpler it can get than cartoons flying everywhere, but you guys are not the noobs. It's if you go to these bigger channels with like hundreds of thousands of subs, that's where the noobs are. Just check out the questions they ask in these big channels. I never get these questions. This is a sophisticated group of so-and-sos. So I appreciate y'all.
Make sure you like and subscribe.